Guys, I have a problem. I always want to be right. And this trait has worked for me somewhat in other aspects of my life, but in trading, it's the worst attitude to have because the market does not care about your feelings or your desires to be right all the time. I'll tell you where this trait comes from in the first place. So I'm super patient when it comes to getting into a trade. I am not some hyper scalper who trades like an algo, getting in and out of trades all the time. So when I'm this patient and then I decide to get into a trade, I am getting in it to win it. And when things don't go my way, boy, do I get stubborn. And I put myself in some not so pretty situations. And it happened to me again this week. So let's jump into Trader View and show you this Hail Mary situation that I put myself into this week. So, guys, we're in Trader View. This is the ticker we're talking about, POAI. The stock's name is Predictive Oncology. They came out with news at 7 a.m. on March 25th. It's a healthcare stock. I do not read too much into the news because I'm not some biotech expert. I let the price action dictate where the stock is going. So I traded 8,200 shares in total. So 4,100 in and 4,100 out. I only made a little over $24 on the stock with 4,000 shares. I paid way more than that in commissions to my broker. And this is why. You see this entire move? This is where I was beefing with the stock before the actual move even started. I should not have even traded the stock for the first 5 minutes. And my first entry, you know what? Let me put this is the 5 minute chart. Let me move to a 1 minute time frame so at least you guys can have a better idea of what I did. So my first entry, guys, here, 702. I mean, it just rejected on the on a little move up, and I already had made up my mind because my patience had reached its limits and I had to trade. So if you just scroll down, look at that. 2000 shares, start a position. So when I checked, obviously after I got into the trade, my entire buying power was 4,000 shares. And I took a starter of 2,000 shares. This trade was botched from the get-go. So, and I kept adding 500, 500, 500, and then 100, then 200. I think I had probably reached my limits. But look at this, guys. I mean, this is just an example of a really bad trade, of a really stubborn trade. 2000, 2000. Even at this point here, guys, obviously, this is where I was saying my Hail Marys. At 167 also, I had almost seen a loss of unrealized loss of close to $1,000. But thankfully, it pulled back and through some divine intervention, thank you, God, I was able to get out. And thankfully, I had the wisdom and the knowledge to just bail literally at the first sign of my trade turning green for the first time in those, whatever, 15, 20 minutes. Because 702 is when I started this trade. I got out at 727 and look at what happened 3 minutes after I got out. It started its move up. I'm not saying I would not have covered my position at all. I would have waited to the top. No. Even at this point here, that's 186. That is 40 cents above my entry. So 40 cents times 4,000 shares, that's a loss of $1,600 in a month where I have not been green more than $400 in a day. This would have been a total disaster, guys, but I'm not proud of getting out green on this trade, guys. And which brings me to my point of a spillover effect of such a bad trade. Let me get out of screen share so I can have a word one on one with you. So, guys, although I miraculously got out green in this trade, but you know what's happened? I've left a good part of my brain and my emotions in this trade because now I'm over analyzing every tick in the market. I'm so scared of making a mistake that I'm not able to even trade freely, and my anxiety is through the roof. And that's the spillover effect of such a bad trade. Now, what's the solution? I mean, the first thing I did already this week was to size down completely because the smaller the size of your trade, the lower the emotions will be. And this includes taking a small startup position. Because if you notice in this particular example that I just showed you, I got in with 2000 shares on my first entry. And then I added 500 shares incrementally. But what I did not realize, and that's bad on my part, is that my buying power only allowed me to be short 4,000 shares on this particular stock. So when I got in with 2,000 shares, I had already compromised my position in this trade. I should not have gotten in with more than 200 or max 400 shares if I had a really high conviction. But you know what, guys? The true solution is not averaging up or averaging down at all. Because if you're in with a small size and the trade is going against you, you should have no problem whatsoever in eating up that loss and then re entering at a better time when you have a better chance to make a profit. So that's the true solution to this because if you average up in a short position and the trade still goes against you, you will only cut that trade when it's unbearable and when you have taken a max loss. I've been there many a times, guys, and it's just not worth it. So, guys, if you have a better solution for me, or if you can drop some knowledge, please do so in the comment section. I will see you in the next video.